Abolish the Securities and Exchange Commission, a decade of battling crypto's top regulator. The Securities and Exchange Commission is responsible for overseeing, regulating, and enforcing compliance on US securities offerings, and following its rules can be tough. Indeed, many crypto proponents would rather disregard or abolish the Commission altogether. Here we'll contextualize their attempts to fight the world's most powerful securities regulator. Crypto promoters have issued thousands of non-Bitcoin tokens since initial coin offerings like Mastercoin, NXT, and Ethereum began in 2013. Almost all ICOs allocate generous quantities of tokens through pre-mines, bonding curves, or other schemes to enrich an inner circle. Due to investors' expectation of profit while relying on the essential entrepreneurial or managerial efforts of these well-compensated elites, most crypto offerings pass the Howey test. In other words, they are classed as investment contracts. In the opinion of the regulator responsible for determining whether an offering is or is not a security, the vast majority of crypto offerings fall firmly into this bracket. Indeed, the founder of the Securities and Exchange Commission Office of Internet Enforcement said, quote, "Every single ICO I ever saw was unlawful on multiple levels," end quote. Former Securities and Exchange Commission Chairman Jay Clayton said, quote, "I believe every ICO I have seen is a security," end quote. While the current chairman Gary Gensler affirmed his successor with, quote, "I find myself agreeing with Chairman Clayton," end quote. Granted, a generic crypto asset might be a commodity or harmless piece of code by itself, but anything, even orange grooves, can be offered in a way that passes the Howey test and makes our offering a securities offering. Millions of token offerings. The scale of unregistered crypto securities is mind-boggling. There have been more than 20,000 ICOs, plus millions of initial DEX offerings, IDOs, on exchanges like Uniswap or PancakeSwap. It's the job of the Commission to ensure that issuers who offer securities to US residents disclose risks. Without mandating the disclosure of risks, issuers can withhold material, adverse information. Obviously, every investment sounds enticing if the issuer can arbitrarily withhold the truth. However, not telling the whole truth is deception, and deception has been a surefire way to steal money from the public for millennia. Unsurprisingly, crypto promoters, especially those who believe that their favourite crypto asset is somehow exempt from the Commission's disclosure obligations, would prefer to retain their legal option to withhold disclosing risks to investors. They believe the Securities and Exchange Commission, whose employees are dictionary defined as public servants, is somehow their enemy. They lambast the Commission in court through media appearances and on Capitol Hill. Some of their efforts have a modest amount of support, even within the legislature. House of Representatives Majority Whip Tom Emmer accused Gensler of failing to provide a clear path for digital asset companies to comply with registration requirements. Many crypto issuers have tried to fight the Securities and Exchange Commission's jurisdiction. The digital asset industry has been watching the Securities and Exchange Commission versus Ripple case closely since the Commission filed its enforcement action in December 2020. That billion-dollar lawsuit is one of the few examples where an ICO issuer had the financial wherewithal to fund years of attorneys' fees. Kik once attempted to raise $5 million in a crowdfunding campaign dubbed Defend Crypto for its court battle with the Securities and Exchange Commission. Coinbase formed Crypto 435, an effort to promote crypto-friendly policies in all 435 districts of the United States House of Representatives. The Digital Currency Traders Alliance is running commercials to try to drum up support for its efforts to combat the Commission's alleged overreach in regulating digital assets. Large digital asset firms spent millions of dollars on lobbying in 2022. Existing organizations like the Blockchain Association jumped into lobbying. For more informed news, follow us on Twitter, Instagram, and Google News, or subscribe to our YouTube channel.